All right. So now the topic is refining, right? So refining, in other words, means you are doing a top-down analysis of an area of supply or demand. Okay. So in an area of supply or demand, we have a thing called order blocks. Okay. So an order block is the last opposing candle before an impulsive move to the down or upside. Okay. So I'm going to say that again. An order block is the last opposing candle. For example, this green bullish candle, it is the last opposing candle before this impulsive move to the downside. So that is identified as a bearish order block because the impulsive move was to the downside. It was a bearish move. So this is called a bearish order block. Okay. So if the move was to the upside, it would have been a bearish candle, and that would be identified as a bullish order block. So for example, this bearish candle is the last opposing candle before this impulse to the upside. So this is considered a bearish, or I mean a bullish order block. So type a 1 in the chat if you get what the order block means. Do you go ahead and type a 1 in the chat if you get what another block means? Or if I should take it again, type a 0 if I should take it again. Well, I think I'm just going to continue because you're not replying. So now to refine an order block, you're going to begin from the higher time frame. Okay, so for this example, I'm going to start from the monthly. Let me clear my chart first. All right, so if you are to refine this bearish order block, and starting from the monthly, you're going to drop down to the weekly. So in that area, that green rectangle, the last opposing candle before the bearish impulse is going to be your weekly refined order block. That means you're taking another rectangle and shading it out. So now we're going to drop down time frames again and do the same thing. So to the daily now, in that zone, we have a more precise bearish order block. So you can simply take out another rectangle and shade it out. Okay. So now, if you feel like refining it to the lower time frame, you can stop on the 4 or 1 hour and then wait for your confirmation before you get in the trade. Okay. So now this was just a random order block that I picked to refine. Okay. When looking for a trade, you just don't come to the chart and pick any other block to refine. You have to identify the structure and know the other block that is more closer to price. Okay, because as you can see, this is very, very far from price. Waiting for this is going to take, my price might not even decide to come to this area now. So, but for the refining concept, now that we're on the 4 hour, you can see that it's more of an area, not just a single order block. We have multiple order blocks here. So if I'm taking out the other rectangle, just to decrease the drawings on my chart, we have this one in the middle. So now what I like to do is wait for confirmation in these areas of supply or other blocks. Okay, so now we have this 4 other blocks sitting over here. So now to get my trade, what I do is I wait for price to tap this other block and then give me a change of character. So now a change of character is another advanced concept that you're going to have to learn. It's a confirmation for entry, okay, for like a safer and more precise entry. So now a change of character would look like this. Price will tap into the demand zone, okay, then break structure to the upside. It must not be a very impulsive break of structure. But as long as price breaks this high, take out this high, and then break structure to the downside, that is the change of character. So now, the change of character will always have an order block at the beginning of the impulse that broke structure. Okay, so that is where I'll be waiting for price to pull back to before I get into the trade. So type a 1 in the chat if you got that, Esther. Have you guys been hearing me? Precious. I hope I've not been talking to myself. Guys, please let me know if you can hear me. So let me know if you can hear me. Okay. So I was asking you a question, Jija. Did you get the entry confirmation concept I just talked about? How a change of character would look. I think I'm going to show you an example on the chart, but from my drawings, did you get the explanation or should I take it again? All right, well, the call is recorded, so maybe I'll just continue and then you can watch it again if you have any questions. So now when I get that change of character, where would my target be? Usually I like to look for a 1 to 3. So for example, if I have a order block this size, an order block this size, so my stop loss will be behind the previous structure. So now this is the previous structure. So my stop loss will be behind it, and then my take profit is a 1 to 3. So wherever 3 stops or starts, that is where my take profit is going to be. All right, you want me to take it again? So I said that after refining your order block, you do not just go into the trade. Okay. You wait for a confirmation. So now a confirmation could be a candlestick pattern or a change of character. Okay. So now this 4 hour order block, was the list I refined that weekly order block to. So remember we started from the monthly, sorry. The monthly time frame. And then refine down to the 4 hour. So this was the one we refined down to the 4 hour. And then when price gets to the order block, I say I don't just go in, I wait for a confirmation. And mind you, I said that order block was just random. When you want to look for trades, you look for an order block that is closest to price. Okay, so don't just come to the chart and pick any order block from anywhere and refine. You might wait forever. Okay, so now for this one, on this 4 hour chart, this was the last opposing candle before the bearish impulse started. So you can have this whole zone as your area of interest. Okay. So now I said that what I usually do is I wait for a confirmation before I go into a trade. So now if a price taps into the order block, what I want to see is a change of character. Okay, so a break of structure above the first high that tapped into the zone. Okay, it must not be an impulsive break of structure, but as long as it takes out this high. Okay, so a break of structure to the other side and then a break of this low impulsively. So I would like to see an imbalance as well in the impulse. And then the other block that broke this structure impulsively is where I want price to retrace to or pull back to before I get into the trade. So I like to target a 1 to 3. Okay, so let's say the other block that broke structure is of this size. What I would do is, if I'm taking my entry from the front of the other block, my stop loss is going to be behind the previous structure, okay, which is this one. So my stop loss is going to be a little above it, behind it, and then I'm targeting a 1 to 3 risk to reward. Okay, so it's basically still close to the entry, the initial entry, like the initial order block that you refine, but it's better to wait for a confirmation than going in preemptively. Okay, just to be safe. But most of the time, the trade might leave you, may just tap into the order block and then drop, may not give you a change of character, but most of the times it does give you a change of character. So you just do your back testing and stick to the one that works best for you. Okay, the market will not always give you opportunities, but when it does, you take your profit and you run. So let me know if you understand the refining and then the confirmation concept I just talked about. Type a one in the chat if you do. Or if you have any question, let me know so I can unmute you and ask your question. Okay, do you have any questions? Okay, so let me unmute you. Okay, you can unmute your mic and ask a question.
Okay, sir. Yeah, I understand what you said perfectly. Thanks for the lecture. And I will still make a review on them. once the video is ready. I want to ask the videos that you sent to me. I was hearing risk to reward ratio. What is it all about?
Okay, so risk to reward ratio is basically what you are risking and what you are getting. So if your risk to reward ratio is a 1-to-1, it means you are risking 1 to get 1. If your risk to reward ratio is a 1-to-2, it means you are risking 1 to get 2. So for example, if you have a $100 account and you are risking 1% of that account, that's $1. So if your risk to reward on a trade is a 1-to-3 and you are risking $1, it means you are getting $3 back when you win that trade. But if you lose that trade, you are losing just $1. So that's what a risk to reward means. If your risk to reward is a 1-to-10 and you are risking $1, it means you are getting $10 in profit if you win the trade. But if you lose the trade, you are losing $1. So that's a 1-to-10. Do you understand?
Oh, yes, sir. Yeah, thank you very much. And what is pips?
Pips. Okay, well, pips are this question is a question I'm supposed to answer for you, but let me see if someone can help me answer it better for you. Precious, Coach Precious, can you help? I want like a more basic answer for that because I did not really focus on learning that in IM, honestly.
Okay.
So
It just simply means it's just an acronym for percentage in points or percentage in price. Do you understand? For some pairs, they have different ways they move. When you hear us say that gold did 50 pips, it just means that gold went from 18, like probably 1930 to 1935. The difference between 1930 and 1935 is what? Ida.
Hello?
Were you listening to me?
Yes, you said
I said pips
hello.
means, can you hear me?
Yes.
Pips means pips is just an acronym or an abbreviation rather for percentage in point or percentage in price. Literally, you know how the chart moves, how the market works. Market moves in prices, right? Either it's going up or it's coming down. Now that movement, that movement between one price to another price is called what? Pips. Right? The way you say I moved from zone A to zone B about 3 kilometers. Do you understand? For
Yes.
travel, right? But for this market, we use pips to tell you like the difference between these points from this price A to price B. Do you understand?
Oh,
And I said for
okay.
different pairs, their pips are calculated differently. If it was a situation that you're trading gold, you know that if we say gold moved from 1930 and brought all the way to 1935, you hear us say things like gold went 50 pips. But in real sense, 1930 to 1935 is about 5, Abby. But because of
Yes.
how volatile it is, the pips, the movement is really heavy. So I'm trying to break this as basic as possible. So for gold, just five pips movement in your own head is about 50 pips because of how volatile that pair is. Now, for pairs like, let's say, Euro USD, you will see things like Euro USD's price is about 1.08000. And you see that Euro USD moved from 1.08000 to 1.09000, and they're telling you Euro USD moved 100 pips. And you're wondering, it's not supposed to be like 10,000 pips. But each pair has their different and calculations, right? But basically, pips is just what we use to measure the movement in the market from one price to the other price. Do you understand?
Oh, Yes. Thank you very much.
Welcome.
I just sent you a short note.
Okay.
So do you have any more questions?
No, for now.
All right, so
Let me.
I just want you to digest this little ones that I just gave you. This can actually help you make money in the market if you do it repeatedly and you are able to identify significant other blocks, not just any other block in the market. So maybe tomorrow or the next time we're on the call, I'm going to give you reasons why another block is significant, or you have to see like more confluences that will help you identify a significant other block. But just digest this refining and then you can repeat that video one more time and then watch this recording again. You're going to get more value. Okay.
Okay, sir. Thank you very much, sir.